trades right here on 18 hours. Just looking at the markets, while we've definitely given up all of the morning gains, right now we're holding just about quiet. 26,360 thereabouts is where the Nifty 50 is currently in trade on the futures. 26,171 on the spot Nifty as we speak right now. The breadth of the market also has given up most of its morning gains, and that too is now tilting in favor of the declines. Interglobe Aviation, Bajaj Finance, Sun Pharma, Cipla, Tata Consumer, Asian Paints, Titan, Nestle. So the consumption and financial end of the market is what is seeing some profit taking set in. In the meantime, the GST collection data has come in for the month of November, and that is an uptick of about almost 0.7%, right?
Yeah, 0.7%. So that number is looking good right now. We just have initial numbers trickling in. We'll be getting you the IGST, the CGST breakup in a bit as well. But the November GST collection stands at about 1.7 lakh crore, up 0.7% on a year-on-year basis. If you take a look at what the number was in the month of October, that was at 1.9 lakh crore. So if you take a look at this on a month-on-month basis, there seems to be a little bit of a blip coming in, but on the year-on-year basis, the number looks a decent uptick of about 0.7%, Asha.
Looks surprising though, because November is when you had everything from wedding to the festive season. So I don't know why this blip, but yes, like October, the GST collections reached that 1.96 lakh crore rupee mark, which was a 4.6% uptick. One would have thought that the November collections would actually manage to beat those numbers. But let's see where the dampener is really coming in from. We'll await details on that data. Ruchit Jain also joins in on the show right now. Ruchit, hi. Afternoon. Great to have you on the show. Ruchit, eased off from those opening highs. What next on the cards for the Nifty? What levels are you monitoring?
Yeah, hi, very good afternoon. If we see, then recently we have seen that higher top, high bottom structure which was formed in Nifty is still intact. Although the participation is not there still from the small cap space, but the kind of buying interest of late we have seen in that large cap space. Looking at that, we believe that it remains a buy and dip market, and any dip towards that support of 26,000 mark, which was earlier acting as a resistance, should now become a support. So also the 20-day exponential moving average for the Nifty is around 25,960 odd level. So 26,000 to 25,950, I think this is the range where important support for Nifty is placed. And any dip, if we get towards that range, then the risk reward ratio would become favorable again to create fresh longs over there.
Okay, that's a Nifty. Ruchit, your take on the Nifty Bank, because we've scaled that 60,000 mark, but we're back below that 60,000 mark on the Nifty Bank once again. What is your take on what could be the triggers that could push that index up above the 60,000 mark again? Could it be private, PSU banks? What could the mix be?
Yeah, so although the overall trend for the Nifty Bank Index is still positive, but within the banking space, if you see, then PSU banks, I think, have already seen a good up move over last couple of months. And the momentum readings are indicating a time-wise corrective phase in the short term could be there. So we expect some consolidation to happen in PSU banking space. It may not be a change of trend, but just consolidation within an uptrend could be seen. But yes, certain private sector banks, if you see stocks such as Kotak Bank is there, or even ICICI Bank is there, the stocks which are trading around the support are showing signs of a pullback move. And even certain, if you look at mid-sized PSU banks, City Union Bank, Karnataka Bank, these are all stocks where the relative outperformance has been seen. So I think the momentum could shift to private sector banks going ahead, where the uptrend could continue in that segment. But I think that even if you look at the Bank Nifty index also, then 58,900 to 59,000 is where the major support zone for Bank Nifty index is placed. So here also, similar to Nifty, we are advising to keep a buy and dip approach. And if we get any dips towards that support, where the risk reward ratio becomes favorable, then one can look to create fresh longs there.
Okay, on that note, let's take a very quick break while we await details on the GST collections, which have seen a dip from the previous month of October. We'll track that data closely, but on the other side of this very quick break. Back with closing trades right here on ET now. While, of course, the market has given up its morning gains, but having said that, there are a few buzzers. Look at AK FinTech, look at IEX, which has surged about 5.5%, KPIT, which is up 3.5% in trade. And then, of course, you're seeing those select Motown reactions as well to monthly sales. So be it a TVS Motors, Eicher, Tata Motors passenger vehicles, that entire segment is looking quite buoyant in trade. Ajay Bagga joins in on the show right now. Ajay, hi, afternoon. Buoyant market, yes, but the broader market yet to catch up. When do you think this broad-based move will come in finally?
Yeah, all of us are waiting for that, Aisha. And today has been quite volatile. The way the market did a gap up opening, we thought, it will carry on from there. But we saw some amount of fall in the market coming through. So overall, it is, I think, a more global issue that we are seeing. The Japanese statement by the Bank of Japan governor that he's looking at interest rate hike at this December Bank of Japan meeting. I think that was negative. Negative manufacturing numbers for a number of Asian countries, and our manufacturing PMI also coming lower than last month. And then the rupee. Rupee surprised by the fall today. Last week, you could understand it would be the bunched up dollar demand from the oil majors. It happens every month end or the last week of every month. We do see that happening. But today was a bit of a surprise. And we were expecting RBI to step in, but that was not very evident right from the opening. And that then spokes the FIs. A fall in the rupee has a very negative correlation with the FI behavior. And I think that's what happened. Some amount of selling came in during the day. So more global. If you look at domestic, GDP headline is good, but core GDP is not so good. Nominal GDP is leaving a lot to be wanted at 8.7. The budget maths makes sense at 10% nominal GDP. So 8.7 is a challenge. And we do need some kind of stimulus to get the economy moving at 10 or if possible 11% nominal growth. That is much needed.
Okay, Mr. Bagga, in light of all of this, the mixed nature of macros that we're seeing, even the GST numbers that just trickled in right now a few minutes ago, not too much of an incremental spike on a year-on-year basis, just 0.7%. But putting that aside and talking about the overall macro setup, what do you think the outcome of the MPC meet could be on Friday? Are you expecting a rate cut, or do you think it will be status quo for now?
Yeah, so first, I think October, November, it's best to take a quarter. So take September end to December end. That gives a better idea because the festivals move year on year. So sometimes there is an additional month which comes into the lunar calendar, and you see the shifting of the festival. So that might be one of the reasons for the GST not growing too fast. But it is a fact that the tax collections have been much below the budget number. In fact, the latest estimates are about 2.5 lakh crores of less tax revenues. Partly it will be met by the huge RBI dividend, and partly there will be expenditure curbs by the government. So if you see the last quarter's GDP number also, government expenditure is a negative 2.5% year on year. So there is some amount of moderation of government expense. That becomes a very vicious cycle then for the market. If the government tries to meet its fiscal deficit number by cutting down on expenses, especially on capex, that really then brings the momentum in the economy. So keeping all this in mind, keeping a low nominal GDP number below budget, keeping a low core GDP number, keeping in mind that the high frequency forward-looking indicators are not looking so good, and the tax collections are also not looking so good, there is space for RBI to cut. So I would say they should cut in December, because any impact of the union budget will come by June. April, it will come into effect, and by June is what a fiscal impulse will cause. This is the time for the monetary heavy lifting to come in. So I would be in favor of a 0.25% cut on Friday, but let's see what the RBI thinks about it.
Okay, that's the take coming in on what could happen going ahead. But let's just focus this. How much do you believe the general insurance and the motor insurance side of companies, they stand to benefit now that renewal is going to be looked at more strictly?
Yeah, it will help if the pool of cars and vehicles getting insured increases with better compliance. But overall, motor insurance is a loss-making product because of the claims. So most of the companies end up making a loss because of the claims. There's a lot of fraud also in this segment. So not a very profitable segment as such. So if we can double the pool which gets offered up for insurance, hopefully the insurance reduces for the entire population. That would be the more dynamic outcome. But I would think that these 50% or 50 more than 50% that don't get insured will largely be non-urban or vehicles where it's difficult to get compliance done on these, because as far as we go in all the metros, there is quite a bit of checking. Even the POC renewal, they ask for the insurance, FASTag as well. We do mention the insurance. So some of these measures are there in the metros. I would think that most of these vehicles might be dated vehicles running internally, and but it's a very huge number. Frankly, I'm very surprised by this 50% penetration. I expected higher, and it will help the entire segment.
Yeah, sure enough, it will be a beneficial move. But, getting back to autos, Ruchit, that's where the traction is today. Eicher, Tata Motors passenger vehicles, you've got a TVS as well holding out. You think this move is sustainable?
Yes, if you look at the positional chart success, then the overall trend for the auto space has been quite positive since the GST rate cuts happened. We initially witnessed a very sharp up move of 1 to 1.5 months during that phase. Post that, the stocks went into some consolidation phase, but again, it seems that to be a resumption of the uptrend for some of the names like TVS Motor, Ashok Leyland, Mahindra and Mahindra. I think those stocks which have been doing well in such kind of space where the broader markets have not done well, I think that relative outperformance could continue. So even to add Hero MotoCorp within this space, some of these stocks are already trading quite close to the 52-week highs. So I think there would be a continuation of the outperformance from the selective names from the auto basket.
And Ruchit, let's get some trading strategies as well from you.
For trading, IEX is one stock that we like at current levels. Post that recent entire consolidation phase, what we have seen today, the stock has shown signs of a breakout from its resistance, that too with very high volumes. If you look at today's volumes and compare it with the recent daily average, then the volumes are quite good along with the price up move. So I think the worst seems to be behind this for now, at least for the short term. And we should see a pullback move towards 158 kind of range. So at current levels, short-term traders can go long on IEX around 156 with a stop loss below 140 for potential up move towards 156 to 158. And within the private sector bank, City Union Bank is one name which we like from a trading perspective. As we highlighted earlier, that certain private sector names, especially the mid-sized private sector names, are witnessing price up moves supported by very good volumes. A consolidation followed by breakout again indicates a resumption of the uptrend for City Union Bank. So for short-term trading, traders can look for creating fresh longs on CUB with stop loss below 276 for potential up move towards 293.
Hold on to that thought, Ruchit. We're going to take a very quick break. Come right back, continue our market discussion with our experts.
Back with closing rates. yes, let's throw the spotlight on some stocks that have been buzzing ever since the get-go and have been doing really well. And one of them is Lenskart today on the back of very strong Q2 numbers that it reported over the course of the weekend. The revenue has seen a healthy growth, but what really stands out this time is the margin expansion to 19.8% from 16.5%. Very healthy move over here. What has really done well for the company is their India and international revenue, which is up 13 and 34% respectively. 56 lakh eye tests have been performed, which is up about 44%. 83 lakh, pardon me, eyewear units have been sold, which is up over 20% on a year-on-year basis. And what really stands out is that the Q2 and the first half SSSG, which is the same store sales growth for Lenskart, continues to be very healthy at 15%. They're on track to achieve their quarterly and as well as the overall FY26 store addition guidance as well, wherein they want to add about 450 stores. They're already at halfway mark at 225 with the second half of the year left, so that looks very healthy. You have Jeffries that continues to maintain its buy rating with a target price of 500 rupees per share on the Lenskart stock, and of course they have announced that in Q4 they are going to be launching their smart AI powered glass, which is called B glasses, a pair of glasses that you can wear that's going to be tracking your health indicators, your heartbeat, your BP. It's going to be able to do UPI payments, translate language in real time. So this is going to be a cool offering when it hits the market in the fourth quarter. But yes, that is what is keeping the stock of Lenskart afloat today. About a 4.5% to 5% gain coming in on Lenskart. So Kunal, no chart check on Lenskart. Of course, very recent chart history, not much to go by. But talk to us about any stock that's looking good to you from the services space or the retail space. What stands out on the charts?
Well, most of the stocks are still going through a path of consolidation over here. Nothing much in terms of the chart patterns for many of these names. Lenskart, of course, the history is a lot more limited. But then when you look at the entire space, hardly I think any few stocks have seen a follow-through price action. There have been few days where you've seen prices moving up higher for these stocks, but then nothing major in terms of price trends.
Ajay, what is your sense on this new paper bout which has come in? And specifically, let's talk about Lenskart and the one which is going to open this week. That's Misho.
Yeah, Aisha, overall, I can't talk particular stocks,
Sure.
but if you see the bunching up of two very big trends, one, huge amounts of IPOs, which is good, but within that IPOs, if you look under the hood, hardly 50,000 crores are actually going to the company. Nearly about 200,000 crores have been raised in terms of OFS, in terms of block deals by promoters, and within IPOs also OFS happening. So that has had an impact on the secondary market also, and it's a very big red flag. In any other market or even in this market a few years back, we would have been worried and you would have been flashing a red sign that why is a promoter selling out of their own company? They don't see value at this level that they are exiting from some stake from this company. So those questions we have put aside in the dustbin, and people are going for listing gains right now. So IPOs have become a lottery of getting allocations and selling on listing gains. That becomes a late-ish cycle kind of a phenomena. Normally what then happens is very highly valued, overvalued IPOs will come in or block deals will come in. MNCs have been already, you have seen MNCs are either listing in or MNCs are taking money out of India, selling stakes in subsidiaries that at 45, 50 price earning, I am 5 times more valued than my international company. So I better take this money and run. In that, the retail is stepping in. So not a very nice recipe for making money in the short term or medium term. I think we're going to see some amount of volatility come in. But right now that frenzy is there, and promoters selling should have been a red flag, but it's not being seen as a red flag.
Okay, that's a take on some of the recent IPOs that we've seen hitting D Street. Kunal, let's shift focus and talk about markets and some stocks that are doing very well. After quite some time, we're seeing some exuberance in City Union Bank, one of the slightly smaller banks. If you talk about the entire bank's basket, 4.5% uptick on City Union Bank today. What's the charts looking like in terms of where the stock price could go from here?
Yeah, I think from the mid cap end of the banking, this has been one stock which has done, I would say, quite exceptionally well. Because just 2 or 3 months back, the stock was sub 200 levels. I think 220 was the breakout point of a previous major swing high for City Union Bank. But then the way the stock has managed to move up higher from those 220 levels to now 280 plus consistently on the upside, strong volumes which we've seen previous month for the stock as compared to the last 5-6 months of a chunk of volumes for City Union Bank. So that tells you that we are looking at a point where the stock has broken out of a major pattern over here at 220 levels, and now we are looking at the stock going to a multi-month upside. The only concern over here for City Union Bank is now that the stock is at a divergence of more than 20% from its 200-day moving average. So that I believe could probably just play a bit of a catch up to the stock price, because eventually once the stock retraces or goes into a price wise correction, it eventually would probably go into a retest of its longer term moving averages. So that I believe could be the only concern from a short term play. I think the stock goes into a correction, as I said, maybe a 10% to 15% correction from the recent highs. That becomes a good entry point for City Union Bank.
Okay. But, slowly the street now seems to be turning the view on IT. Much less to lose rather than, still the question mark on how much to gain. What's your opinion?
Yeah, you put it very well, Aisha. And overall, the game now is getting the end users up. So the people who had to make the money on semiconductors or power supplying, power transmission, renewables, the data center operators, data center erectors, all those have made money, and their next 5-10 years of earnings have got discounted in. Now the end use is coming. So if our companies can get that right and provide end use software to use this infrastructure which has got set up by I think we could have been for better days. But we are not out of the woods, and I would stay more on the mid-tier IT companies which have some visibility on using AI rather than the big guys. Big guys, I think, are still struggling. The good thing is IT allocations are increasing globally. So we are expecting more money to be allocated to IT. Now, will it come to our companies, or will it go into more hardware, more cloud services? Will the big four in cloud services win out most of this increase in revenues, increase in outlays? I think that's a key question. And that to be sorted, you need end use end use case studies to come in. We've not seen many of those still. We'll have to wait and watch. But under-owned, underappreciated, not like that all sector should be a buy. The valuations don't make it that keen a buy. But mid-tier IT, some names that you took earlier in the program, those are still doing well. So whoever has a play on the end use side will do well, more mid-tier than large cap.
That's a take coming in on what looks good within the IT basket. But Kunal, what about you? What do you think looks good from the overall IT pack? Is it large caps all throughout, or is it the mid cap that provides a better value perspective right now?
It's a balance of both. So large cap wise, we've been discussing HCL Tech and TechM are the two names which are the strong relatively. Look attractive at current levels. I think Infosys, TCS, Wipro are the ones which are lined up as the remainder in terms of the large cap names in terms of ranking on the basis of pure strength, the price recovery in the recent past, as well as the comeback of these stocks from their 2024-25 highs for themselves. Then I think from the mid cap IT names, you have the likes of Persistent, which has been doing exceptionally well. There is a breakout which we've been discussing last week also on Coforge. That stock has done exceptionally well for itself. And now you are seeing other IT names, the mid-cap IT names showing signs of recovery. KPIT Tech is coming out of a consolidation. The stock, which used to just about drag at this 1200, 1150 mark for quite some time, that stock is starting to show signs of price volume breakout. So there are few of those mid-cap IT names which is starting to show signs of strength. But the large cap IT stocks and the leadership as such, if you can mention that way, still lies with the likes of HCL Tech as well as Tech Mahindra.
Okay, so that's the take on the IT pack. Kunal, anything else that looks good to you from the broader end of the market, given how we were tilting with so much conviction towards the advances in the first half of the day, and that has taken a complete reversal today, and now we're more in favor of the declines. Anything that now looks like a good buy?
See, I think the capital market themes is something which is still looking attractive. So, in the likes of BAC, CDSL, MCX, etc., they would still look very attractive. We've also seen the, the broking firms as such, the likes of Angel One, etc., which have gone through a decent correction the last 1 week or so, 5% to 4%, correction on the short-term charts. Even these stocks have come back towards a very good support point. So maybe from a trading perspective, this could be one theme which traders would want to look at, because when these stocks go into that 4-5% correction, what happens is on the hourly charts specifically, the indicators very quickly come back into an over territory, thereby making the risk reward a little bit more attractive than what the usual setup for the stocks are when these stocks go into a very steady as well as a gradual uptrend.
Okay, that's the take coming in on some of